Hi traders, this is Forex Nelson and I'm back again today with another training video for my Pip Sniper trading system. Today's date is April the 13th and this video will be called How to Trade the London Close. The video will be about 30 minutes long. The idea is quite simple. The London opens at 2 in the morning, which is about here actually 2 o'clock. Well, that's the start of my blue box here, but it actually opens at 3, slight correction, and for 8 hours from 3 to 11, where this line is, that's 11 p.m. New York time. That's when the London closes. Now keep in mind, it's not going to happen, the pullback is not going to happen precisely right at 11. It can be an hour before or an hour after. It's a time zone. Now the idea is the market makes a nice move, and I like to see at least 80 pips, 100 pips or more. Like it's moving from the London. So from here up to there is like 85. And then when you see it bouncing around here at the top, and you're getting sell signals from here, that's a sell, 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 sell. One more little push. So what you're going to do is, you know where your stop has to be. Right here. So you have an hour to pull the trigger. There's your stop, about 14 pips. First target is always gold, 20. And as long as everything is red down at the bottom and looking exactly like this, there's a good chance it's going to keep going and test this support, which it did. Now in this Euro Aussie trade, that would have been about 68 pips if you closed it out around here. So I'm going to be showing you lots of examples on Forex and futures. Now, not every pair will do the London close pullback. So one thing you got to keep an eye on it is the meter. Once it makes a move, as it's going up, let's say it's the Euro Aussie, Euro will be at the top, Aussie will be further down, depending on what the value is here on the Euro. But once it's starting to do the pullback, they'll get closer together. Euro will get weaker and the Aussie may go up some more. In value, of course. Okay, let's take a look at the Euro CAD. So I put a line here, and it's a zone. Again, it's 11, but sometimes it'll be around 10 or after 11. Like this is a little bit after 11 before it finally dropped. Market did the same thing from the London up to there is about close to 100 pips. Bounced around here for a while. Got sell signals starting right from here. These are all sells. That's your push back up to test this area. So if you get in, let's say on this candle as it's going down, that'll be your stop. You're risking now 10 pips, and usually it'll make it at least to the goal line, which is 25 pips. And as long as everything is absolutely red down at the bottom like this, there's a good chance it's going to keep going to test this area of support, which is 68 pips. So remember, London makes a move. Well, it started here down, then it went up, and then New York kicked in, bounced around, London closed, and this is more than likely the New York traders who bought, who are now cashing out. Let's check out this Euro Yen now. Look at this London move. From here all the way down to there is 135 pips. And anytime after 10 o'clock or 11 or 12 Depends on how much bouncing around it's doing here. Once you get a buy signal, and there it is right there, blue, 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 TZ is going up. This goal line's going up. You're going to get in on the next candle and everything is perfect for buying. Stop will be, well, 26 pips. First target, gold, 32 pips. And for me, once it dying out around 60 pips, I would certainly, close the trade and be done trading for the day. Now, normally I'm catching this move down. But if I'm preoccupied and I really want to trade after 10 or 11 or 12, certainly you can do the London close, and you can of course do the futures. Okay, moving on to the Euro New Zealand. Here's the London push, almost 100 pips, bounced around a bit. This is 11 a.m. London close. Got sell signals down at the bottom. These four are all sell signals. Now in real time you can always get in hoping it's going to keep going up, but that's like 24 pips. But if as it's going up, it stops. Bearish engulfing candle right here. Things are turning red right there. So let's say you get in here with a 10 pip stop. First target is here, but I wouldn't close right away. That's like 30, and it just keeps going, and you can stay in the trade until you start to see some blue down at the bottom, and that's like almost 80 pips there. So that's the London close pullback. Okay, let's move on to the euro dollar. Same situation. London all the way down to here, 76 pips. Anytime after 10, once you get a buy signal, which is there, wait for the pullback. Remember the magic word, when this candle closes, wait for the pullback. There's your stop, 11 pips. First target is there, almost 20 pips. And if you can get 20 to 40 pips on the London close, generally that is okay. So that's about 30 pips there. Okay, let's check out the pound pairs now. The pound Aussie. Check this London move. 129 pips. That's the exact time it closes at 11. When this candle here closes, wait for the pullback. That's kind of like a given. Magic word, whatever you want to call it. Stop will be 13 pips. First target is gold, and it hit 45 pips. Now, of course, once it stalls here, here, and here, you can get in, put in a 10 pip stop, and you're trying to get back down to here, which is possible, and it does happen. 48. Now the thing is, trading is just a game of probabilities. You get in, and if you believe it's going to go down, well, keep your stops pretty small, because if it breaks through and keeps going up, then from here to there is a pullback, and going from here up to there, that's a complete reversal. Okay, let's move on and check out this pound CAD here. Here we go. You're just going to measure London down to the bottom, 77 pips. London anytime after 10, 11, or 12. Soon as you get a buy signal, remember the TZ, that's what you're going to follow, this magic indicator. It dips below the 20, and this is your first heads up right here and on the line. So on these two candles you're going to get in. Stop is within 20 pips. First target gold 17, and then when it hits this area of resistance, which is around 40 pips. Pretty good looking London close pullback. Okay, moving on to the next pound. Pound Swiss. This one didn't do quite as much, around 40. But anytime after, round 11, you see this double bottom right here. When it's not going any further down, and on these 3 candles, we have all kinds of buy signals down at the bottom. Stop will be about 10 pips, so you're risking 10, and you're going to see what it's going to do around here, which is around 10 pips. You just hang around, and as long as everything is blue down at the bottom, TZ is going up, this goal line's going up, we're above the water line on the AO, well, just hang around and grab some more pips. All the way to there is 28 pips. So, just because it's the London close doesn't mean you're going to get 100 or more pips. All you can get is what the market will give you. And remember, the market is very random. It's a game of probabilities. You're just going to see price action, take the trade, make sure you have trade management and money management in order. Okay, let's run a check on the pound yen. It's a pretty good pair to trade, and you can trade the pound yen all 3 sessions. London did a nice move. That's all you're going to do is check, especially when you get 190 pips. There's a very good chance it's going to at least go back to the goal line. So this is 10 o'clock. Remember, anytime after 10, you're getting buy signals here down at the bottom. More buy signals right on the line. On this candle, when it pulls back as low as possible and then starts to go up, that's exactly where you're going to pull the trigger. Stop is roughly 20 pips. First target goal, that's 47. And that's about 70 pips, and that's about as much as what you're going to get. And 70 pips for the London close is fantastic. Okay, pound New Zealand. Here's another one, just been going up and down and up and down. 75 pips, London close. Buy signals on this candle, as you can see down at the bottom, everything blue. Remember, when it's doing pullbacks, the momentum, it's based, it's a little bit lagging to say the least. These are the 2 candles you're going to get in on. You always know where your stop is. 10 pips, first target goal, 29, topped out with almost 50 pips. Remember what I said? 20, 40, 50 pips, generally as a rule, is a pretty good London close pullback trade. Found another example for the London close. The market did make a move from here to the top, which is about 140 pips. And then once you get a sell signal, which will be right here on this candle. So you have about these candles, you can pull the trigger. I would just go with 20 pips. If it's starting to go up there, you just have to forget about it. But it did end up giving you around 35 to 40 pips. So you just take what the market will give you. Okay, let's move on to another example. Here we go, pound dollar. Market gave a push all the way to the top there, about 80 pips, very close to that. Once we're getting sell signals on this candle, the next one, that's the London close, by the way. You can get in on the next candle. Let's say you get in about here with about a 15 pip stop. First target is 16, which is the goal line. And as long as everything looks red down at the bottom, it's going to keep going down, giving you around 40 pips. Not too bad at all. Here's another example on the pound dollar. Market's making a move of about 100 pips. When you see a whole bunch of wicks, look at this, whole bunch of wicks, not going or breaking this top, you're getting sell signals down at the bottom on these, here, and on this candle. wait for the biggest push up because that's your stop. Let's say you get in there, your stop will be about 12 pips. First target is gold, 26 pips. And as you can clearly see, everything down at the bottom remains red. So you're looking to test this bottom, which it did. A good solid 80 to 90 pips or so. When you see this wick right here, perfect doji, buy signals down at the bottom, well, you have to get out of your sell trade. And if you really want to continue trading, you can trade back to the goal line for 32 pips. You have to think of this goal line like a very powerful magnet. Price every day will come back to the to the goal line. Now I always used to use a 50. My last mentor said he uses a 30. Another person uses a 20. You can use a 40. You have to experiment, and whatever value is good for you, and you find success at trading using it, then that is a good number for you. Okay, let's check out dollar CAD. Market did a move, well, from about here down to here, which is about 80 pips. Anytime after 10, you get buy signals. There's a buy signal right on this line. Here's your pullback. Your 20-25 pip stop. First target is gold at 17, and eventually it did top out with anywhere from 30 to about 40 pips. Did a pullback. If you want to continue trading, remember, as long as the goal line's going up, we're above the waterline on the momentum here, comes back and kisses the gold, well, nothing wrong with grabbing another 40 pips. There is many different ways to trade. And the more ways that you learn how to trade, the more pips you'll be making, and eventually that will translate into a lot of money for you. Okay, now we can look at the futures. It moves the most, it pays the most, and at least 3 of them you can actually double your account in one trade. That's the DAX 30, NASDAQ, and Russell. So here we go, crude oil making a move. Let's see, 440 approximately. These are ticks, by the way. London closed right on this line. So it did one more test down to the bottom, which is tradable, right on the goal line. Nothing wrong with getting 152. If you did one standard lot, that's $1,500. So once it stalls here, you're getting sell signals right in this candle. Get in as it's dropping. Stop will be about 60 ticks. Remember, on futures, 10 or 20 ticks will not hold most times. It just will not hold. But you're risking 60. Testing the bottom is what you're aiming for. And let's say you got 380. If you did one standard lot, that would be $3,800. And of course, you can continue trading. Every time it comes back around the gold area and the T area, you can grab another close to 200. And that would represent one standard lot, $2,000. For Asian, I'm sure you'd be very happy with that. Okay, let's check out this DAX 30 now. Keep in mind that the DAX 30 closes 3:45 p.m. New York time, and then it opens many hours later at 2 a.m. New York time. London opens at 3 right here. So from the top down to here happens to be now remember, you're going to include every digit, every number. 27.89 approximately. So once it does a nice huge move, and by the way, if you want to double your account, the magic number is 1334. So let's say, well, you could have easily doubled your account there. Even if you got in as soon as you got the sell signal, get in on the goal line, you would double your account. 133, oops, there, bang, right on. If you did one standard lot with a $5,000 account, that $5,000 account becomes $10,000. Then you're going to get a buy signal on this blue candle. What's the magic word? Pullback. Get in, maybe this candle as soon as it turns blue. Stop will, well, either here, that's 600. I don't know if you want to do 600, but certainly 200 is a small number. And you can double your account when it hits 1, 3, 3, 4, right there. So in theory, you can double your account twice in one trading day doing the German DAX 30. Okay, so that's a good example of the London close pullback. The Dow Jones. Dow Jones, nice move from the beginning here to the top, 570. Dow Jones does pay $5 a pip. Now this is exactly the time London closes. Remember, it could be an hour before or an hour after. In real time, remember, you're buying every time it comes back to the T area. Nothing wrong with 280. You can get in there again. Nothing wrong with 140. But when you see that it's not going to break the top anymore, and you're getting sell signals down at the bottom, you can get in on this candle, the next candle actually. Stop will be 75 ticks, and it did bottom out. Well, let's say it's 400, and if you times $5, that if you did one standard lot, that would be a $2,000 move. Pretty good as far as I'm concerned. Okay, let's move on to gold. Now, gold pays $10 a pip. Let's see what the move is first of all for London. Let me see, close to 200. Now remember, once the moving average separates, every time it comes back to the goal line, you can take the trade. Now the London close is right where this line is. Does one more little push. Remember, your stop should be there, which is 30. You're risking 30. And your first target is gold, which it hit. Remember what I said? Powerful magnet. There it is right there. Let's say it's 63. Even if it's just 60. 60 times 10. So $600. Not too bad for London close pullback. Let's see now. Try to find, okay, NASDAQ. NASDAQ, it's $20 a tick. Let's see this move from the top of the box to the bottom of the box. Remove the last two digits. Remember, the magic word is, not word, but the magic number to double your account will be 250. So once it hits 250, if you manage to pull the trigger at the top and get out here with a one standard lot on a $5,000 account, that'll turn it into 10,000. Now remember, when you see price not going any further down here, TZ is coming from the bottom and you're getting a buy signal. This is get ready, time to buy. Remember, magic word, pull back. Stop is 38, 48, but as you can see, it didn't even go one pip against you. First target is gold, 86, topped out with 125, and then times 20, It'll be 240, 250. $2,500. Not bad for a London close pullback trade. Okay, Russell pays $10 a pip or a tick. From the bottom of this blue box to the top up there is roughly 630. And then the London close is about this line. Market does one more little push. And once it's starting to go down, you're getting some red down at the bottom. Time to get in the trade with about a 70 pip stop. Never hit it. First target is gold, 132. And remember, as long as everything is red down at the bottom and we're below the waterline on the momentum, just stay in the trade until you start to see some blue down at the bottom. Now for me, definitely around here I'm out. That's about 340, and then times 10, that would be about $3,400, like if you did one standard lot. Hopefully you're beginning to realize that these futures pays a lot more than Forex. But one thing for sure is that if you freak out, you get nervous, you worry a lot about your trade if you're doing the pound pairs, and you can hardly handle that, you must stay away from futures until you're very good at trading the pound pairs. Because just as easy as you can make a lot, actually double your account, you can actually lose a lot. And the number for doubling your account, since it's $10 a tick, to get 5,000, you would need, the number would be 500. And as you can see, you remove the last digit, and from the top to the bottom down there is 536. So from there down to there, it's possible to double your account. You have to trade maximum lots that your account can handle if you want to double your account. Okay, let's run into the S&P 500. This move from here to the top is about 836. And this one's very hard to double your account because the number, I forget what the number is, to be honest with you. I think it's 1,000. Like, you need a lot. You need more than 885. Anyhow, it's $5. Yeah, it's $5 a pip, so it has to be 1,000. 1,000 ticks. So this is around the time of the London close when you see wick after wick, price not going up anymore, especially over here. And then from there to there, price is going up. You can see from this point to that point, it's going up. And from on the TZ, from here down to there, it's going down. And this is called negative divergence. And when you see negative divergence, along with these timing bars, they're also going down. When you see negative divergence, negative means we're selling. It's going to start to go down. So maybe one pip below this spinning top right here on this candle. Stop is around 97. First target is 150, the goal line. And as long as everything remains red, we're below the waterline on the momentum. That's sell territory. Remember, below the waterline, selling. Above the waterline, buying. So we're going to stay in the trade until we start to see some blue. The TZ is going up. So about here, looks like you can get on average 600. And those 600 ticks times $5, that move right there would represent $3,000 on a standard lot. Okay, let's move on to silver. Now silver, you're not going to see a lot of numbers in the blue boxes, but keep in mind that each tick is worth $50. So here we go, found an example, a move from here down to the bottom, is 57. And then of course once we get a buy signal on this candle, we can get in. And your first target is the goal line. Did produce roughly 20 pips total. So 20 times 50, that represents $1,000 if you did a standard lot. Okay, looks like coming towards the end that 30-year bonds is not a really big mover. I wouldn't do the London close on that one. But just keep in mind, if you cannot trade the London and the New York, but you can trade anytime after 10, 11, 12, lunchtime, whatever, you can consider grabbing 20 to 50 pips on these London close pullback trades. So it's time to wrap up this video, and of course if you have any questions, all you got to do is get in contact with me, and if not, good luck with your trading, and we'll see you in the next video.